Good afternoon, traders and investors. It's Will back here with another one. And guys, it's official. The QQQs has officially hit a new all-time high. So the bull market does continue. No red flags as of yet, guys. So SPY up 0.61% on the day, QQQ up 0.51% on the day, and very beautiful green across the market. Decent outperformance by the Russell as well. So in today's video, we're going to go over a few earnings that we have for you guys today. We are going to go over more specifically FactSet, which is going to be number one, and FedEx. FactSet is a data provider, institutional and financial data provider here that provides information on company earnings and analysis as well. Very, very widely used in the investment banking and hedge fund and private equity world. And they also have a few retail clients as well. And we're going to go over FedEx here. FedEx with a bit of a tumble after hours. And then, of course, we are going to cover our major indexes, our major tech names to wrap it up. And lastly, my portfolio, see how we're doing on the week. So without further ado, guys, let's get right into it here. On terms of the broad market performance, we had a decent day of broad market performance. As you guys can see, no true outliers to the green. Everything was kind of mixed. Everything pretty much bringing in under 2% gains for the day, but it was a very solid day for the markets overall. Financials, healthcare really holding up their part, and big tech also continuing to rally. Slight little pullback here in a few semiconductors, but that was okay for the most part. On the one-day relative, you will see as well that all major sectors were pretty much in the green, led by basic materials and energy with a bit of a comeback there. 1 week relative, everything's looking beautiful, guys. Just look at these charts, 1 week and 1 month relative performance here, guys. Everything is looking very good. And even on the 3 month, which we very rarely look at on the channel here, you can see that most of the losses from the last few months here, August, September, and October, have all but been erased as our indexes march to all-time highs. So very, very good day in the markets. QQQ smashing the all-time highs ever so slightly, but still it is a new all-time high. Now a few indexes to their all-time highs. QQQ is number 2. The Dow Jones did it first. So to start off everything, guys, let's get into our earnings right away. And we're going to be covering FactSet. So FactSet, guys, if you don't know really, I presented it a bit in the intro here, but FactSet, what they do is they're a data research company. So they provide analysis on company earnings, very, very detailed breakdowns in terms of all your data analytics that you could possibly want for any given company. They are known as one of the industry leaders in terms of that, and that's why they're very widely used by everybody in the banking sector who does any bit of analysis whatsoever. They are always using FactSet data to build massive Excel spreadsheets here. And they're also obviously a very, very big business-to-business entity, as well as a lot of their clients not only are retail, but a lot of their clients are actually big firms that buy this software so that their employees can use to conduct analysis under. So FactSet here reporting before the open, and they did fairly decent here, guys. They had a bit of a drop here on the morning, as you can see when they reported earnings, down about 3%, but recovering intraday in the trading here. And FactSet has been caught in a very, very wide range for the better part of the past 2 years. You can see this beautiful tightening range here over the last 2 years. On the monthly, you can see it even better. This company is a very solid company, guys. Its direct competitors are pretty much companies like SPGI Global and MSCI, so other institutional and retail data providers in terms of financial analytics. I would personally say that a company like SPGI is a bit more well-rounded, so that's why I prefer a company like MSCI or SPGI, just because SPGI has a few different lines of business as well. Obviously, they have the indexes that they run, which brings them very, very high margins. They have their rating agency as well, and not only that, they also do the data analytics. So they're a bit better of a rounded business than FactSet. FactSet is kind of very niche into only data research and analytics, but you can see this company has printed very, very, very good gains for shareholders over pretty much the better part of the last 20 years. And now it's pretty much the same, guys. So we have a very beautiful monthly tightening range here, monthly price expansion to the upside. I do believe we're getting ready for another monthly leg up here. And FactSet did fairly decent on their earnings as well. So I'll show you that, guys. We'll do a little breakdown here. Earnings, ever so tiny miss on the earnings here, guys, but a bit of a miss on the estimate, but that's okay by about $20 million. Nothing to be too surprised out here, or rather 0.002 cents per share on the EPS, which is very, very tiny. They did beat, however, on the revenue there. And this company is a company that generates about 8% EPS growth per year. So not very, very, very high like the other ones. If you want me to pull up the chart for SPGI, it's pretty much the same, right? So the EPS growth of SPGI will be double that of FactSet. So they are very, very outperforming FactSet in terms of that. And MSCI, another one of the direct competitors here, is outperforming here 13% EPS growth for the next 5 years. FactSet only about 8%. I don't have it up on the chart here. But that's in terms of the technicals here. So the technicals are looking fairly paced for a breakout here. I would be more tempted to buy this company if it were down below more in the 420 range. Could be potentially good to start a position. But as I said, guys, not my favorite play, but I figured I should present the company just nonetheless because it is a very, very solid player in the industry here, guys, right? Very defensive company, good for pretty much every single market, any market conditions whatsoever, right? So here we're going to pull up the direct earnings. You can see that they did have a very, very good first quarter here, 7.1% here in organic ASV. ASV is pretty much annual sales volume here. So professional services growth, very, very good, driven by higher wealth sales and increased sales of data. And they do have very, very high operating margins as well. So this is their gross operating margin. You can see if I pull up the net operating margins for FDS in terms of the year here, you will see that they're always in the mid 20% range. Very, very decent profit margins down here on the bottom right. So very, very good company in terms of delivering consistent profit margins. And they do increase their EPS, and they do a lot of buybacks, which we'll cover later here. So here we have again, once again, 95% ASV retention. That is a very, very solid number. That's what you want to see, clients that are sticking with the product. Very high user count as well. This is the individual user count. So over 207,000 people are using FactSet for their data research purposes into financials. That is a 14% up change since 2023. In Q1, which is very, very, very good. Here we have 90% client retention, right? And we also have a business to business. So this is the client count. So the business to business client count here is almost 8,000, which is a very, very solid number here, guys. So you can see this is a very well-rounded and popular company. Really, it's known more in the banking industry than from retail, but a very, very solid company nonetheless. You can see here, obviously, that they do have a very, very good growth rate. Once again, that 7.1% comes up, almost $2.2 billion in revenue here for their services. So very, very, very solid. Here's the first quarter 2024 financial results. Very, very good, right? So here it comes again, the 7.5% roughly of revenue growth. Operating income was up 10%. That's what you always want to see, guys. Double-digit growth in operating income. Very, very, very good metrics in my opinion here. Up about 8.6% in net income. So that's always good. They're able to increase their profitability here, and a 9.1% gain in diluted EPS here. So very, very, very solid. The main point for this company is that they have very solid cash flows, guys. Extremely, extremely solid balance sheet for this company. You'll see it down here if we bring it up, right? So free cash flow yield is pretty good, even though they did take a bit on a bit of debt here in 2022 and 2023. That's because they've been doing a few acquisitions. That's the only reason. If not, they are a very, very high free cash flow monster when they're not doing these massive acquisitions here. Company's balance sheet is extremely solid here. Just a very well-rounded company. Nothing really more to say, guys. And the one main thing is that they have been buying back a lot of shares here over the past 10 years. You can see that they've bought back pretty much over 10 million shares here in the past 10, 12, 15 years, as a matter of fact, all the way proceeding back to 2008. So very, very solid company. Nothing fancy to be said about the company here. So this is the last slide I'll show you. We remain focused on returning capital to shareholders, and you will see that the FactSet continued share repurchase in the fiscal quarter of 2024. So this is pretty much, you have the cash dividends that they do pay down here in light blue, and the dark blue is pretty much your share repurchases. So you can see, other than 2022, when they did a major acquisition here, and 2023, when they did a couple of small acquisitions, they are regularly buying back shares in terms of boosting the company's EPS here and boosting shareholder returns. So very, very solid company. For me personally, I do like MSCI and SPGI better just because they're more well-rounded businesses, but I see no problem at all if you were to target the lower end of this range here for a potential swing trade on FactSet. That's anywhere between the $420 range and about $385. Seems like a very good technical area for me for a future monthly breakout trade. No red flags for the company whatsoever. So that's pretty much everything for FactSet. Now let's move on to FedEx. FedEx had a terrible day after hours on the earnings. You can see here, guys, down almost 10% after being very, very robust year from FedEx here. You can see pulling back from last October. We'll start it right off here in January. From pretty much the beginning of January, they're up, 55, 57% on the year. So very, very beautiful year by FedEx indeed. They were fairly close to the all-time highs before today's earnings, right? Only 11% off the all-time highs. That was a lot better than UPS. You can see, guys, UPS is still substantially off all-time highs, roughly more than double that, right? So UPS was off roughly 30% from the all-time highs. That's why I went with UPS when I went for my swing trade on these transportation and logistics companies here. So FedEx reporting lackluster guidance, guys, and lackluster guidance, especially on the revenue. And I'll show you what the problem was here when we get into the data. So earnings and revenue, you can see they had a double miss here. So not only did they miss by about 5% on EPS, they also had a slight, ever so slight miss on revenue as well. And now the share price is absolutely crushed here. FedEx for me is not the better buy. The better buy for me is UPS. If you want a transportation or logistics company, I do believe that UPS represents better value. And it is also, UPS is also the number 2 transportation and logistics company after Amazon. Amazon's number 1, UPS is number 2. This is in terms of total sales volume. And then FedEx is number 3. So FedEx, although they did have a very, very nice rally up, they're closer to the all-time highs. And now we will see what happens with this dip, but pretty much dipping back into this technical support area here of around $250, right? So this area was previous support all the way here in the back. So we will see if they can get that done here and pretty much try to manifest a pretty much very ugly head and shoulders, inverse head and shoulders pattern. We'll see if they're able to recover, but I did not like the revenue outlook here, guys. FedEx shares tumbled 9% after weaker demand hit revenue outlook. This is kind of the same thing that UPS said, but UPS said that they would still be growing revenue next year. FedEx basically said their revenue for the next year would be flat. So very, very a negative sentiment around their revenue here. FedEx results fell short of estimates in their fiscal second quarter. The company's express unit was hit by lower demand. They lowered their full year sales outlook. And the only reason they were able to protect their EPS is because they have been cutting costs. So they've been able to keep the margin the same, but that's not from revenue expansion. It's from cost cutting. You know, bit of a double-edged sword there. Not what you want to see. It's good that they're protecting their EPS, but not good that it's coming from falling revenue. So company said it expects a low single-digit decline in revenue for the fiscal year, down from a previous forecast for flat sales year over year. So that's number one. Analysts had expected a revenue drop of less than 1% in the current fiscal year. It's the second consecutive quarter FedEx has lowered its sales outlook here. So in the remainder of fiscal 2024, we expect revenue will continue to be pressured by volatile macroeconomic conditions, negatively affecting customer demand for our services across our transportation companies. So once again, guys, consumer discretionary spending, people choosing to go through FedEx less and less, potentially going on Amazon, getting direct shipping from Amazon, and the lower priced transportation and logistics companies. As you guys know, Amazon is very, very good in last mile, and last mile is normally not delivered here by UPS and FedEx here. So for the most part here, not that great. For the 3-month period ending November 30th, FedEx reported net income of $900 million or $355 a share versus $788 million or $307 a share a year earlier. So growth year over year, but for the next year will remain flat here, guys. So that is the negative, the negative catalyst here. The company credited cost-cutting initiatives for its higher profit. Revenue fell 3%. Now, here's what we're going to see on UPS and FedEx, right? Let's dive into the numbers here. So you will see on a quarter-over-quarter basis, the quarter-over-quarter has been falling here for FedEx, but this has been absolutely the same for UPS. You can see UPS as well is in that same little state here, right? Of declining revenue quarter-over-quarter as people spend less and less money. But what is that for, guys? Well, it's all about the comps, the comparative sales. So let's pull it up on an annual basis. When we went over UPS, I told you guys that 2021 and 2022 were outlier years. A lot of demand was pulled forward as people had free and cheap money to buy as much stuff as they wanted, especially in the post-pandemic years. Now we are returning to normal growth. So you see this big drop off in EPS in UPS and this big drop off from 2022 and 2021 in UPS as well. Now, if we pull up the chart of FedEx, it looks exactly the same here, guys. So on an annual basis, you will see that 2022, 2023 down, right? So down from the pandemic years, but FedEx is less robust. You saw the difference in the EPS chart, right? So here's FedEx and now here's UPS, right? UPS with very, very robust past couple of years, nice uptrending chart overall. FedEx a bit more inconsistent, guys, a bit more inconsistent, and that's why I prefer UPS over FedEx. And you'll see here as well, right, over 2021, 2022, 2023 ending is going to be roughly flat comparatively to last year's earnings, and the next year growing ever so slightly, whereas UPS is the better buy in my opinion, just because their revenue will also be expanding here 2023 to 2024. Nice little expansion here and nice little growth on EPS. So two companies really battling it out here, guys, really competing hard against each other. I do believe that UPS is the better buy in my opinion here. FedEx, unfortunately, down. And now that I've sold my UPS position, if you remember, guys, we got out on the covered calls last week for 157.50. It's trading below that now. If UPS starts revisiting these lower 150 areas, I will be purchasing shares of the company again. That's pretty much everything I had for you guys in terms of our earnings. Now, let's get right into our technical analysis of our major indexes here. And give me a very quick second. And let's get into it. So, SPY here, guys. SPY etching out another positive day here, marching towards the all-time highs. But as you can see, they were slowed down a bit by the dividend here. If you take a look on the futures are actually much closer to the all-time high. Well, not much closer, but just by the amount of the dividend here. So in the futures, we're down only about 0.88% from the all-time high. And if you take a look at SPY itself, SPY is off the all-time high, but about 1.21% here. So it's really that dividend that really plays into this issue here. I was reminding you guys yesterday, this is not a daily high or low. This is the dividend payment that just came out. So if you take a look on the futures index, you will see that SPY has been pretty much up every single day for roughly the past 10 trading days, getting fairly extended, if I do say so myself. So I raised this concern yesterday on the channel here. The daily chart is slightly overbought. So when that happens, we need to go back in time and see what happens when it gets historically overbought. Well, you can see that over here, when it was slightly overbought, we did have a little dip here. However, this whole year, 2022, was a downtrending market. So let's see what happens in an uptrending market when it gets overbought. Well, you can see one instance of it up here. It's back all the way in 2021, right? So 2021, when we got this really, really high read on the RSI here, we did have a slight pullback here. So the pullbacks are to be expected, but it does get follow up with further gains as well, and the market just continues to move higher. This was a very, very deep correction after a massive, massive move to the upside here. You can see the read on the RSI is currently about 84. When's the last time this happened as well? Well, when we got all the way up to 2018. This was the interest rate crisis of 2018. If you guys were in the market, you may remember it. If you weren't, well, just take this for granted here, guys. This is when the Federal Reserve made a slight play on interest rates, wanting to increase interest rates, and the Trump presidency pretty much battled against that, and that's why the market was able to recover here. But you can see several instances where the RSI does get this high, it tends to pull back aggressively, but these are only in cases where big macro things happen. In a normal environment where you're not looking at any macro and the RSI gets overbought, look what can happen as well. So you can see we get fairly overbought in this section right here, but the market just moves sideways and just grinds higher, right? Sideways movement and grinding higher can be met with RSI moving lower. You see it a few times in the past as well, where we had a little bit of a dip here, right? A little bit of a dip, grind roughly sideways here. That's not that big of a dip in the grand scheme of things, right? We're only talking about a 2-3% dip here over the course of a few weeks. And then the market just continues to grind higher as the RSI gets brought down with sideways consolidation. So in this circumstance here, guys, when we're looking at our current markets, I do believe that we're in the type of market now where we may go into more sideways consolidation rather than a very big dip to the downside here. I do believe that the markets will be able to eclipse the all-time highs now before that sideways consolidation. The best case scenario for the bulls, let's pull it up on SPY itself. Best case scenario for the bulls, in my opinion, would be a break of the all-time high leading into the next few weeks while maintaining slight overbought here on the daily RSI, right? Would be a breakout of the all-time highs, then come and sit back onto it. If it wants to sit back onto it as people take profits into the new year, perhaps, well, that would be a great opportunity here to load up for more buys. So that's kind of what we're looking at here, guys, on the SPY. I do believe the SPY is set up very beautifully. Bulls are obviously in full control here. The daily high or low is anything above 454. Anything above 454, looking for a daily high or low, a little bit of consolidation. Maybe that cools off the RSI. And then I do believe we are poised to march towards the all-time highs. You see that best on the weekly here. Weekly uptrend, leg number 2 has pretty much just started. So if we do get any daily consolidation, just expect a couple days, a little bit to cool off the RSI here. And then we're going to march forward. On the 4-hour as well, you can see the 4-hour chart is roughly overbought, but look what happened over here, right? Massive overbought read, consolidation for a day and a half. Look what happened in the RSI, right? Now, RSI trending up ever so slightly, little bit of bearish divergence here. This is your bearish divergence formation on the 4-hour. So if we do for some reason pull back here, guys, target your 12 EMA. You can see SPY has never really lost the 12 EMA this entire rally since the month of November. So we will see what happens with that, guys. But one thing's for sure, if you don't set a 4-hour downtrend, we cannot be talking about daily consolidation yet. So the bulls are in full control. Now let's move on to QQQ. QQQ, new all-time highs, guys, 409.16. And the previous all-time high was right here, this candle right here, 408.71. So QQQ's all-time highs looking very, very, very bullish indeed. So now QQQ, same principle, anything above 383.27 is just looking for a daily lower, higher low here for consolidation for further price improvement into the next few weeks. QQQ well underway on its second leg of this weekly uptrend right here. So in my opinion, guys, this is exactly what's going to happen. We are probably going to push through here, end the year very, very nicely. And then the markets may just chill out here early January as people take profit and defer taxes into the new year. And then we may just come back and sit on your previous all-time highs. That would be the best case scenario for the markets, because once you've cracked your all-time highs, you're going to have a very nice area of support to come back and sit onto maybe for a few weeks while the markets consolidate a little bit. But as of now, guys, the bulls are in full control. The RSI is overbought, but we saw that on the SPY. It can be overbought, right? It can get overbought right here, pull back for a few days, and then just move for a couple legs higher, all while the RSI stays relatively low as well. So RSI can be a good indicator, guys, but you have to couple it with other technicals as well. And the more important one is the weekly. Daily RSI can be cooled down in just a few days of pullback, and QQQ can afford a few days of pullback. Any pullback is for a daily higher low for further price improvement, in my opinion. It gets really dicey, guys, when we run into a weekly situation of overbought levels, which we don't currently have right now. Now moving on to XLF. XLF churning out more gains here, 0.75% to the upside. So you can see, guys, very, very beautiful leg. We were looking for the daily bull flag here. So anything above 35.75 was just going to be a pullback, higher low for further price improvement here. And we were saying target this area for the pullback, right? 37 all the way to 36. Didn't even really get there, right? Just a few cents above, didn't really come down and sit on this area yet. So XLF really now pushing above our resistance area as if it wasn't even there, guys, and it needed big news to flush through this area, and it got the big news in the form of the FOMC revision to the downside for interest rates for the next week. That's why financials have been on an absolute tear recently as well. So financials looking very healthy, guys. I do believe that this is a bull flag, and for any which reason we don't crack the top and continue to consolidate sideways here, guys, this will be very beautiful sideways consolidation. It is a bull flag for a potential retest of this area and move higher. The weekly bulls are still in full control, not overbought on the weekly here, and still on the daily. On the daily, we do remain overbought here. That's just why I say if we do consolidate sideways or down for a little bit, guys, that will just be a very beautiful option for the bulls to do some slight weekly consolidation here before another move higher into 2024. Financials are set up very, very well indeed. XLV Healthcare, very, very good as well here, guys, right? Recovering nicely on the day here today. So we were saying we were expecting healthcare after this pullback here to rally if QQQ and XLF chose to take a couple days off. Well, that didn't happen, guys. Everything rallied at the same time. So the market rotation continues to be extremely healthy. Daily uptrend is beautiful at this point, guys. We got the higher low. Yesterday is going to be the higher low here, pretty much 133.51, right? We were looking for anything above 131.27 to be your daily higher low for another leg up. We will now be targeting this area of resistance. 136.59 is going to be the big area, big area all year of resistance. So I'm very curious to see if the bulls will be able to break above this in the next few weeks. If you do, you have a clear bull break, and then same principle as the rest of your indexes. I'm expecting a breakout, a retest of this area potentially into January, and then move higher for the remainder of 2024. Healthcare is set up very, very beautifully for it as well. Daily bulls in full control, weekly bulls in full control. Even if you get a pullback, guys, just going to be for a higher low for further price improvement. And on the monthly here, we are looking for the break of this monthly area that would confirm your monthly uptrend pretty much. So healthcare looking very, very good indeed. IWM Russell, after a few days of consolidation here in our resistance area, challenging the top of the resistance area, guys. Very, very good here. Passing above our $200 psychological level for the first time in pretty much, right, a year and a half. a year and a couple months, right? Since August 2022, have we not seen $200 on the Russell? So very, very solid by the bulls indeed. Now we have a new leg to a daily uptrend here. So now any pullback is going to be for a daily higher low above 196.11. If for some reason we can't move past this resistance here because we are overbought and we need a bit of a correction here, and they set a daily downtrend by losing this higher low, no problem at all, guys. The weekly bulls have tons of space to work with here. If that happens, expect a weekly pullback here. Target the lower area of this, which is now the resistance area, right? 195. That's been the area that's come up a lot in the past here. So I do expect the bulls to be able to use this as a bit of support before launching another leg higher into 2024. Russell bulls looking very, very healthy indeed. Even on the monthly, guys, you can see that now we are set. If the month of December closes like this in the 200 to 205 range, you will have a new monthly bull trend, which has not happened since pretty much 2020 and 2021, right? So a couple of years in the making here, Russell finally able to get that bullish breakout momentum going here on the monthly. So looking very good overall. Now moving on to the Dow Jones here. Dow Jones, new all-time high again here, guys, right? So very, very solid moves by the Dow Jones. Continues its price improvement. Anything above 36,000, just looking for a daily higher low for further price expansion. Dow Jones very, very overbought as well. So we put the RSI on this as well. You can see it's all the way up to 86. So everything now, guys, getting a bit overbought on the daily RSI. You can see the last time this happened was in 2018. So RSI levels really unseen here on the Dow Jones since 2016, 2017, and 2018 respectively here, right? But you can see that obviously there's a few times where the market does pull back. This was a macro event 2018, so I won't take that one. But let's just say right before that, right? So they have a few right before that. Look what the Dow Jones does sometimes, right? So Dow Jones overbought, same level on the RSI, right? What happened? Consolidation sideways for a while, move higher when the RSI was lower, right? Same thing happened back here as well. Take a look at this, guys, right? So if you take a look here, got here, move sideways for a couple of weeks, market moves higher as the RSI is lower, comes into a new peak, consolidates ever so slightly, right? Cools off the RSI, and then the market's poised for another move higher over the next couple of months, right? These pullbacks, 3%, right? This consolidation range, 1.5%. So it doesn't mean that the market always has to correct, guys. You only get big corrections when big macro events change. And I'm not expecting any big macro event changes here in the foreseeable near future. So that's why I say I do believe that once these moves on the daily top out, we may be just due for some sideways consolidation into some early January profit taking. So that's all I'll be looking for. Keep an eye on this support area here, 37,000 down to 36,500. That is your previous all-time high area, and I do believe that's going to be acting as nice support. When they do consolidate, we're going to get everything at the same time. We're going to get daily and weekly consolidation at the same time on all these indexes because now they've been moving up for a better part of the last 7-8 weeks in a row here, guys. Now let's move on to big tech. So Apple, give me a second. Apple recovering so slightly after yesterday's negative news here. So Apple up 0.54% here. Just a series of daily higher highs and higher lows continuing here. At this point, we will be targeting for a new higher high, which will be in that, and guys, it'll be also a new all-time high, right? So Apple bulls playing very, very good defense around the previous area of all-time highs, right? So take a look at this horizontal channel here of support. Been a very, very big area of support in the past, or resistance in the past. Now the bulls are kind of using it as support. This kind of looks like what Amazon is doing right now. Going to be tough for the bears to break through this, right? So bulls doing a very, very good job of playing defense of the 12 EMA here as well. Apple looking poised, but once again, Apple is a bit too rich for me here, guys, especially at the all-time highs, considering their price to earnings ratio as well, historically a bit high, and with the revised revenue growth for next year slightly down and EPS roughly the same as has been the past 2 years, no big expansion on EPS. Apple is kind of trading a bit high for me here, guys. So we're going to be looking for that future daily leg up here, right? A break of 199.73 is obviously going to give us the continuation of the daily downtrend. If for whatever its reason we set a daily downtrend here, that's okay, guys. The Apple weekly bulls have tons of space to give back. Anything above 187.80 is going to be a weekly higher low for further price expansion. But I do believe Apple can power through here a bit higher into the $200 range before the year end. So that's pretty much it for Apple. Moving on to AMD. AMD doing fairly well as well here, guys, right? AMD up a bit on the day, up about 1%, but you can see struggling here with the upper 140 area. It's been a few times now where we try to push 140, but get rejected. So this is just sideways consolidation RSI not cooling off that much because we are putting in higher highs a lot of these days, right? So you just need to see a bit more sideways and down consolidation to really bring down this RSI level. Consolidation area, guys, I will repeat, 132 down to pretty much 127 is going to be the area that I'm looking for the daily higher low. As of now, it's just a sideways bull flag, right? The bulls can literally just do this and then move higher, right? So I'm just looking for a move higher on AMD. AMD bulls full control, just looking for the daily higher low for further price expansion. Weekly is looking very good. Weekly uptrend is confirmed. That's why I say if we do pull back here, guys, even on the daily and the weekly, keep an eye. 132 to 127, previous 52-week high area, guys, is going to be a very, very juicy spot for support, very, very juicy buying spot for AMD, in my opinion, as well. And the monthly uptrend is more than set, so nothing to worry about in terms of buying this dip for the longer time frame. So AMD performing very, very well. Overhead resistance, guys, if we continue our march north, overhead resistance is put 148 all the way up to about 155, these guys all the way here. Then it's the all-time highs. Amazon here down ever so slightly on the day after moving a bit higher on the morning here, pulling back ever so slightly on the day, but that's okay. Amazon breakout is largely complete at this point. So anything above 143.65, just looking for a daily higher low for further price appreciation, Now, keep an eye on this level here, guys. This whole level right here, right? Let's just move this line up ever so slightly to illustrate the concept, right? This area right now, guys, is going to be a very tough area for the bears to come back in and break. So I'm expecting a breakout of this zone, retest this area. The best the bears are going to be able to get, in my opinion, is down about the 149 level. Your 12 EMA is there, then this whole area is going to be acting as support before a future leg higher. So Amazon daily bulls full control. They have resumed the daily uptrend at this point, just looking for the daily higher low for further price improvement. On the weekly is so bullish, guys. Weekly breakout is underway currently, right? So this was a weekly bear flag for a couple of weeks, now breaking up to the upside here. So looking very, 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 very good on Amazon, if I do say so myself. I do believe that this next weekly leg up is going to take us all the way up into the 165 to 170 area. That's the next area of resistance that I'm targeting myself. So I will be holding my Amazon shares till at least that point as well. Fundamentals of the company are looking great. We are in full breakout mode at this point, looking very good on Amazon. Now let's move down to Google. So Google recovering very, very nicely from its previous dips that it's had in the past couple of weeks, guys, right? So now Google all the way back up to about 138.25, even in the after hours here. So we are still looking to set a new daily uptrend after having lost the daily uptrend right here. Now the bulls are looking to reset a new daily uptrend. That would be a break of 140. Break 140, and the new daily uptrend is set. Your daily higher low is right here, right down here, guys. 131.10 is your daily higher low. We'll be looking for the bulls to fulfill the daily uptrend here. But if for whatever reason we continue to pull back, just goes into a tightening range, guys. And the tightening range does favor the bulls. Why? Because the higher time frames are extremely bullish. You have a weekly inverse head and shoulders formation on Google looking excessively bullish. This is a weekly uptrend in formation as well. Break of 141.19 would give the bulls the new weekly uptrend after having lost it here with the earnings, right? So looking for the new weekly uptrend currently. And on the monthly, guys, you're also looking for the monthly uptrend confirmation. That would be a break of your 52-week highs here, 141.80. So looking for a few things on Google at the same time. Just a few more dollars is going to complete so many things. It's going to complete your monthly uptrend confirmation, going to complete your new weekly uptrend confirmation, and it's also going to give the daily uptrend back to the bulls. So that if that happens, guys, if we break these levels, bulls full control of everything. Google relatively cheap here, guys. 26 EPS for the year, trailing 12 months. On a forward basis, only about a 2021 for the end of 2024. So Google's still relatively cheap. One of the cheaper names in big tech currently, looking very good for the breakout. Google is, in my opinion. Now moving down to Meta. So Meta here, guys, Meta with a new 52-week high, Meta crushing it today here, guys, up another 1.5%. Daily uptrend more than confirmed at this point here, guys. So anything above 328.93, just looking for a daily higher low for further price expansion. Daily bulls are in full control of this chart here, guys. Keep an eye on this area right here, right? Previous resistance, this area right here, let's call it 340, and the moving average curling up. That could be an area where the bulls may just likely retest before breaking out ever so slightly further here. Meta looking very good for continuation into the end of the year. The weekly uptrend is very well in motion now by the bulls here, so no red flags whatsoever. Meta will continue its march, in my opinion, all the way to the, well, they're pretty much there now, guys. Look at that, 352.92. So, right, about $353. Next area of weekly resistance. If they crack that in this one weekly move, we are moving on to our all-time highs, 383 area. Not any resistance really before your all-time highs once we get through these guys. And we're already here. Meta looking extremely bullish for continuation here, guys. Trading still not that expensive here, guys. On a 12-month trailing basis, about 30, and on a forward basis, trading about a 27. So even though they've recovered very, very healthily, well, they're still not that expensive here, guys. So Meta performing very, very good. No red flags whatsoever. Just a bit too expensive for me to be buying at these levels. I preferred it down in the 310 to 320 myself. Now, Microsoft trying to protect this tightening range here, guys, right? So we've been consolidating sideways on Microsoft. And here's what I mean by sideways consolidation, right? A few down days, sideways consolidation. Look what happens with the RSI. Down back to mid levels here, right? So very, very nice consolidation by Microsoft. My buy target is not too far away, guys. I should move my little green box up. Buy target is 355 all the way down to 340. If we ever visit this area, I will be buying some Microsoft stock. Microsoft looking extremely attractive for the future as well. And the key is on the daily here, guys. We are just looking for your weekly higher low. Anything above 325.50 for a weekly higher low for further price expansion. Now, if we crack this area right here, 377, you do have your new daily uptrend in motion. That would mean your weekly higher low is set right here, 363, and we are on to a new weekly leg up here, guys. So Microsoft looking very good, playing good defense here, stuck in a range kind of like Tesla was, right? So 377, and then all the way down here, 363. Whichever one breaks first will give you an indication. Break to the upside, you're looking at the continuation here of your weekly uptrend. Break to the downside of this range, it's fine. Still weekly consolidation here for the weekly higher low and then the move higher. I'll tell you guys, the weekly higher low is only confirmed when you get a new daily uptrend in motion. So far, that's not been done yet, which is why we can't confirm that this has been the weekly higher low. So keep an eye on that for Microsoft. Now moving on to NVIDIA. NVIDIA pulling back ever so slightly on the day here today, back down below $500. So really struggling with that $500, really struggling to close above it and maintain momentum through it here, right? So NVIDIA, very, very healthy chart here, guys. Just looking for the daily higher low. Any pullback is going to be for a daily higher low. Anything above pretty much 460 is going to be looking for a daily higher low for further price expansion. So if NVIDIA is not able to really get right through it right there, may have to pull back ever so slightly before putting in another leg higher. But NVIDIA looking fairly good if you ask me here, guys. On the weekly, everything is looking very bullish. Weekly uptrend is confirmed at this point. Weekly higher low is set down here, 452.88. And now we are just looking for a crack of the previous all-time highs. Crack of the previous all-time highs, guys, would mean just weekly trend continuation, but it would mean monthly uptrend is set on NVIDIA here, off to a great start to 2024 potentially here. So keep a close eye on that for NVIDIA, guys, but bulls with tons of space to work with, right? Anything above pretty much like your 460 level, right? Just looking for a daily higher low for price improvement. Obviously, the resistance we're struggling with is the previous all-time high resistance that's come in a few times in the past here, guys. No red flags, in my opinion, on NVIDIA yet. Now, moving on to our few last ones here. Tesla doing very, very nicely here today, guys, up 2%. So really just continuing this motion higher. This is just one move higher. So price improvement is here. We now have a confirmed daily uptrend. Any move lower here, guys, going to be for a higher low, anything above 228.68. Looking for the higher low. If we do pull back from here, expect the retest of this current, the previous resistance area, right, which is now going to be acting as support. 12 EMA, this yellow line right there, is also going to act as beautiful support. So if we do pull back from here, I'm expecting a retest of this area before moving higher into the 260s. If we just continue to move higher, your resistance is set, guys, 268.50, and then it's all the way up to pretty much the 280s. But the first stop is definitely going to be the 265 to 268 region. So keep a close eye on that for Tesla. Weekly bulls are in full control at this point too. Weekly bull flag confirmed, weekly uptrend confirmed as well here, guys. Looking very, very good. Weekly uptrend in control, and the monthly uptrend is in the bulls control as well here. So we are going to be looking for a break of the all-time highs somewhere Q1, Q2 of next year, in my opinion. Well, not the all-time highs, their previous 52-week highs here, about the $300 mark before we can start tackling the true all-time highs, right? But as of now, daily bulls looking very, very healthy. Just keep an eye on your short-term resistance area and your previous support. In any case, for which we come back and retest. If we come back and retest here, guys, I will be writing some short put options here. 240 down to about 230 is going to be my sweet spot that I'm targeting to write those options at to pick up some shares. Now moving on to Palantir. Palantir down ever so slightly here in terms of candle movement, but up green on the day here. So up 0.62%, but you can't really tell just by looking at this chart, right? Red candle on a green day. So Palantir still continuing here to struggle, trying to maintain this daily uptrend. Anything above 1726 is just a daily higher low for potential continuation. But if we lose that, guys, well, the daily downtrend is restarted by the bears at that point, and your weekly consolidation is not done. Keep an eye on Palantir, guys. We've been watching this weekly consolidation for about a month and a half at this point, right? So I need the bulls to play some defense around the $17 area here, really keep this weekly bottom alive and give us the best chance here of rallying back to these previous levels. $17 area is crucial, guys. It was previous resistance, and now that's why it's getting a bit tougher here for the bears to crack this to the downside. Bulls playing some very good defense. The bulls are still in control here, guys. Bulls are in control of your monthly chart. They are in control of the weekly chart as well. It's just the fact that they've lost the daily, right? The bears are in slight control here. A lot of momentum to the downside. Bulls are trying, but I need to see them move a little bit higher here. Break of 1915 and good momentum here will bring us right back into this lower high right here. And as soon as we start moving back to the $20 range here, guys, with a big daily uptrend set, we will be confident in saying that our higher low now is 1716 and your new weekly leg up to move to new highs here is in motion. So that's pretty much it for Palantir. Still set up beautifully, guys. Currently in my buy zone right now. PayPal, very beautiful day on PayPal here, guys. So daily uptrend is continuing at this point. We got the daily higher low. I'm pretty sure this is the daily higher low here, guys, right? So 60.93 is going to be a line in the sand level for me. Lose that area, daily downtrend has started, and weekly consolidation is potentially underway. The weekly is looking good. It's currently above our little short-term moving averages here. The yellow line is the 12, and the orange line is the 26, trending above them now. We have not been above our moving averages on the weekly here since all the way back in July, guys. It's been a while, right? So bulls, great momentum to the upside, tightening range, breaks bullish, looking for the continuation of the daily uptrend. I'd like to see them get all the way to the $65, $66 range. That's because it's our previous weekly high here, right? Our previous lower high here on the weekly started from 65. If we can engulf this whole thing, it sets us up for a potential cup and handle or just a continuation here, breakout, retest of this zone, reset the weekly uptrend to the upside here, coming into lower interest rates for next year, which will be very good for PayPal. So very good breakout here by PayPal indeed. Continuing its move to the upside, just a little bit more to get here, guys. And for whatever which reason, if we do pull back hard for, let's say the markets pull back hard, very beautiful area of support now created around the $60 range. So that is going to be something to watch out for PayPal. But as of now, PayPal continuing its march forward here, guys. Next stop is going to be 65.66 as resistance. That's pretty much everything I had for you guys on the technicals. Let's take a quick look at the portfolio. So taking a look at the portfolio here, guys, you will see that we are doing very well indeed. New all-time high on the year for the portfolio. Keep in mind, we have withdrawn 15% of the portfolio here. So our true performance is about 85% running the put wheel strategy, guys. So it works, right? So compared to the S&P 500, we are now up 70.22% on the year. S&P 500 only up about 23.5% here. So almost close to a triple in terms of performance against our benchmark here. And keep in mind, guys, I've been running this strategy for a number of years at this point, pretty much. And it usually always does tend to outperform the indexes by a fairly decent multiple here. So that is the advantage of being a small trader and not having billions of dollars under management, because people who have billions of dollars under management cannot run the wheel strategy, guys. There's just not enough options contracts on every single strike for them here. So this is one of our good strategies that advantages us when we are a small trader, guys. So look into that. I have a video on the channel. It's my main video on the channel, how I generate weekly income writing put options. It's the same strategy that I've been doing all year. Now against the NASDAQ here, you can see that we are still up against the NASDAQ. NASDAQ with one of its best years ever, guys, 43.5% to the upside. After today, more likely 44%. And we are beating it by a factor of about 1.5x here. We're up pretty much 70.22% on the year. So very good performance by us. This is what we were calling for here, the return end of year rally off of the positions that I had done a good job building here during the term of the dip. Now, moving on to the positions here, guys, you'll see that positions haven't really changed here. I still have my Palantir contracts open. So the 17.5s for Friday are still open. Got them for 24 cents. They're down to about 15 cents. Palantir trading around $18 right now. The 18s are currently in the money, right? So we'll see if we get assigned the $18 strike on Palantir. We wrote them for 44 cents. The premium is down on them, however, since they've been hovering slightly under 18. So we are up on the contracts itself, but I will be holding these to Friday and see what happens. BABA, we wrote the BABA 72 puts for Friday as well. We wrote them for 67 cents. You can see, guys, they're down to about 20 cents. So decent profit, about 75% profit already on those contracts. We'll see if we hold them to maturity or close them tomorrow and find something else, if something else is available. We wrote the Starbucks 99 calls here today. So wrote a bit of calls here on Starbucks just to see if they do hit the 99 level by Friday here. So Starbucks, I'll pull up the chart real quick. Very, very simple. I got assigned 100 shares here, guys, at $97. We got 22 cents. Our break even is 96.78 pretty much on those, right? So we'll see if we can crack above this $99 resistance area over the next few days. If we do, I might be able to roll some premium into next week. But if for ever which reason we stay tight here, I will just collect this additional premium here, this extra 23 cents on Starbucks, and we'll see if we can write some higher strikes. I took a little cheeky, that's a little cheeky play for me. I would like to ride the daily breakout on Starbucks into the 102, 103, 104 area. So we'll see what happens with that in terms of how we end on Friday here. But if I do get called away on Friday here, let's say they just jumps on me and we're not able to roll calls for a decent premium, well, that's okay, guys. It'll still be a well over 1% play here, buying at 97, selling at 99. That'll be $200 plus our premium as well. Be well over 1% play, almost 2% play in about a week and a half. So can't complain, guys. We're respecting the strategy. Tesla 245 puts are on deck here, right? So we wrote a short put Tesla 245, which is the top end of the range. As I said, guys, I will be playing, if we do breakout, I will be playing the retest of this range. You can see 245 is right at the top of that range here. So looking to maintain above that here by Friday. We got $1.44 for them, and they're down to about 58 cents here. So nice little about 60% profit on the contract so far. We'll see how it ends on Friday, and we are still holding a bunch of shares in everything else here. So you can see I still have my swing trade on Adobe. After their earnings, they're up roughly $20 a share here. So nice little gain here on 7 shares. We still have our 25 shares of Amazon that we bought Friday after the close, looking to swing trade those into the 160s. TMF 20-year play, still have those. Oracle, still have my Oracle shares after we made a play on their earnings after hours here. Still going to hold these, want to hold these to about 115, 120. ETH and Bitcoin, still need to build more positions on those on the pullbacks. BABA, still have our BABA shares. BABA's coming up ever so slightly here, guys. So we are going to ride those until we are in covered call territory and then probably run them even more. CP, nice gain on CP at this point. Still not ready to write covered calls. I'm holding this position, guys, until we get a bit closer to covered call territory here. Covered calls on this one, you can only do them once a month. They're only monthly contracts. So I want to be a bit closer, guys. Don't want to write too far out because I do believe that CP is starting a nice little run here. So I wouldn't be surprised if we get into the $80 range. So I'll be holding those as straight shares. Google, still have the Google play, right? So we still haven't rode covered calls on Google. I want Google to really smash its 140, 141 area of resistance and start that next weekly leg up. So I will be holding Google a bit longer for a swing trade rather than just wheeling out of it with covered calls right away, guys. So you see how I'm manipulating the strategy a little bit when momentum is on our side. And Starbucks is the position I was just talking about. PayPal, we still own, obviously. CSIQ coming back nicely, still not in covered call territory. My break even is about $28, so need it to come a bit closer to that. And my Canadian banking shares now decently in the profit by about 50, 60 cents here. So doing very, very good on those 1,000 shares. So that's pretty much everything for the portfolio, guys. We've been running a couple of positions with the momentum, not writing covered calls on them yet. And then when the market shows signs of wanting to pull back a little bit, I may just target some covered calls, make sure we get some juicy premium. But I am looking to ride those Google shares a bit higher as well. So that's pretty much everything for today's video, guys. Hope you enjoyed it. Consider liking the video if you did. And thank you so much for the 500 subscribers, guys. I'm so happy. It's actually a milestone for me. Now we have to aim for 1,000, obviously, but thank you to each and every one of you who've subscribed to the channel. You've made this journey very, very fun for me. And as always, guys, if you have any questions, feel free to answer them. Feel free to leave them down below in the comments here, guys. Anything you want, right? Macro, technical analysis on a specific stock, options play that you want me to take a look at, guys. I will give you my input, what I would do personally if I had the position, not financial advice for you guys, right? So take an eye on that, guys. Keep safe for tonight. I'll see you guys after the close. Take care and peace.